All right. Morning. Morning, everyone. So we decided to start with a little jaunty tune. So good morning to today's program. Hello, everyone. My name is Lizette Gabriel, and I work as a librarian in the Business and Economics Department here at the Los Angeles Public Library. Welcome to today's presentation called The Basics of Taxes. This program is brought to you by the the Koreatown Youth Community Center, KYCC, and our presenter for today is Taylor Lee. So I just wanted to do a few housekeeping details. That if you experience any technical issues, please go ahead and put them in the comment box, and we will try to help you out with them on my end or your end. So I will be typing any sort of commands to try to sort of hopefully help you out with them. If you have any questions during the presentation, please go ahead and put them in the comment box, and we will try to answer them at the end of the presentation. This program is being recorded and will be available on the library's YouTube channel after it ends. So please be aware that if you miss anything during the presentation, or you won't, for some reason, you have to step away or are busy, again, it will be saved and recorded on the library's YouTube channel. So with that being said, I will now pass it on to Taylor, and I will bring Taylor on stage.
Thank you, Lizette. And thank you, everyone, for joining us on this Tuesday morning. It is a little bit overcast today, so I hope you guys are able to kind of get some sun some way, somehow, even with it being a little bit cloudy. But thank you for joining me today. Like Lizette mentioned, my name is Taylor Lee, and I am a campaign and partnership coordinator here at Koreatown Youth and Community Center, also known as KYCC. So today we're going to go over a little bit about the basics of taxes, some information that may help you reduce stress and some anxiety around filing your taxes, whether you've never filed before or whether you've used another platform to file or whether you pay somebody to file. We are here to raise awareness and let you know about a free tax filing service that we provide throughout the city and county of LA called Free Tax Prep LA. As the name implies, it's completely free. If you make less than $70,000 a year, you most likely are eligible to file for free with any of the organizations within the Free Tax Prep LA collaborative, which is really, really amazing. You don't have to be paying somebody to, $300 or $400 to get a refund that could go directly straight into your pocket. And that's kind of how we like to advertise Free Tax Prep LA in the best way possible, is you get your entire refund back to you. So on top of filing, we're going to go over what qualifications you need to claim certain credits, the difference between state and federal credits, and all of that good stuff. So kind of to reiterate what some of the things that Lizette mentioned, but there will be time at the end of the presentation to answer any questions that you may have. So rather than, feel free to put questions in the chat while the presentation is going. However, I'm going to be tackling most of the questions at the end, just so that we can get through the presentation as smoothly as possible. And I would refrain from including any personal information in the questions that you may asking. Of course, we can go over some general situations, but if you have information that's very specific to you or your situation, I would kind of withhold asking those questions, since these are the video will be posted publicly and just for the safety of your own information, to keep it as general as possible. All right, so let's get into it. Free Tax Prep LA. What is Free Tax Prep LA? I've kind of gone over a little bit, but we are a collaborative of about more than 30 different organizations throughout the city and county of LA. It's a public awareness and education campaign that serves to reduce tax season stress and is a collaborative effort between the city and county of LA, Koreatown Youth Community Center, which is my organization, and the United Way of Greater Los Angeles to promote and support the filing of the Earned Income Tax Credit, which is just one of many credits that you may be eligible for as a working Californian. So some of the things that we will cover, we'll cover federal credits and deductions, state credits and deductions. So maybe that's something that someone who hasn't filed before, or maybe you use a platform and you just weren't aware that federal and state credits are actually separate, but there are different credits and refunds that you can get from the federal side and the state side, which is specific to the state of California. And for many of the credits, if you're eligible for one, you are most likely eligible for the other, so you can kind of receive double the credits that you may get if you just claimed one side of the credit. We will also be going over individual taxpayer identification numbers, otherwise known as ITINs, for those who don't have social security numbers to file their taxes. And we're also going to be covering myths and misconceptions around filing that may sometimes make you feel more anxious or feel like you are not able to file taxes. We can kind of ease those troubles for you. With clarity and knowledge. Also some deadlines and important dates and other ways that the collaborative can provide help to you entirely for free, maybe not necessarily through Koreatown Youth Community Center, through KYCC itself, but through other organizations that we partner with and are trusted within our community. So, all right. So, first off, for federal credits and deductions, credits are what you can get cash back on for your refund, and deductions can help lower the amount of taxes that you owe, just to cover some terminology here. But like I mentioned, there's federal side, which is, for all of the US standard throughout the states, and then there's also state credits and deductions, which would be specific to California, as we reside in the state of California. Some state credits are a little bit more accessible, I would say. At least the California state credits are more accessible than the federal credits are typically. So that's one of the great things about living in the state of California. We may be able to claim more credits than other states, or I'll just be able. We're in a situation where we can claim credits that we may not be able to claim the federal side of, which is better for us. We get more money in our pockets just for living in the state of California. Also, some information about the individual taxpayer identification number, who should apply for it and why, and how can we help you with this process through the Free Tax Prep LA Collaborative, which is pretty important information. Applying for or renewing your ITIN, if you go to a paid preparer, can cost anywhere between $300 to $500. And we're here to let you know that you absolutely do not have to pay somebody to get your ITIN renewed or to apply for one. So that's we want to help you save that money for sure. Also, myths and misconceptions about taxes. Taxes are a scary topic for many, many people. Not only are they scary just as an individual, but the fear around filing taxes is something that social media kind of latches onto and can make worse just from reporting the news, right? So that's something that we're seeing not just with taxes, but with other topics in our day-to-day. There's a lot of fear-mongering, so we're here to ease your mind and reduce stress when it comes to filing, and this is by letting you guys know what the truth actually is and how to separate the truth from the falsities, the facts from the myths, right? And also, of course, deadlines and important dates. Why wait to file when you can file for free? Get ahead of the curve by staying on top of tax season. Also, if you are expecting to owe during the tax season and you miss the deadline to file, then you may have to owe additional fees just from missing the deadline and not applying for an extension. So on top of having to owe money, if you're not on top of your deadlines and you're not getting your forms submitted in time, you may have to pay even more money on top of what you owe. So trying to avoid that, trying to avoid owing in general, but if you do owe, you want to make it the easiest process for you to pay it back. And then, like I mentioned, other ways we can help you. This will include some legal aid resources, how to spot scams and prevent being scammed, or getting phished or phishing scams as well. Just basic ways to protect yourself and other free resources. So you don't have to pay anything out of pocket to access these resources. All right, so into the actual tax credits and deductions. So some of the tax credits and deductions that we'll be talking about on the federal side include the Earned Income Tax Credit, the Child Tax Credit, The education credits, there are 2 education credits that are granted through the federal side that we will be talking about, or through the IRS that we will cover, and also deductions for paid student loan interest, which is a very specific deduction if you have student loans and you've been paying some of the interest off while you're in school or after the fact. So all of these have forms that you would be receiving or that you can look out for, and we'll go over exactly what kind of forms to keep an eye out for each credit as we dive deeper into each one. So for the federal credits, some of the benefits or credits that we've gone over, some of the metrics that we've collected over the past couple of years, or for the EITCs, actually, it's been around for almost more than 50 years now. Last year was the 50th year, but the Earned Income Tax Credit started in 1975. So that's, over 50 years of credits. Claiming the federal EITC helps individuals meet basic needs, increase economic stability, and reduce financial stress. It's one of the few ways that Americans can get unrestricted funds into their pockets, because when you receive your refund from the IRS, you're not told that you have to spend it on a certain thing. You have the freedom to choose, okay, how am I going to spend this money? It doesn't have to go towards groceries. It doesn't have to go towards this one thing. You have the freedom to choose what to use that refund on. So it's one of the beautiful things about your tax refund. However, in Los Angeles, 1 in 5 individuals that are eligible for the EITC do not file a tax return. This results in almost $600 million going unclaimed each year. And the only way to get the EITC, or the Earned Income Tax Credit, is to file your taxes. So everyone who, for some reason, just didn't know that they should file, or forgets to file, or feels like they don't need to file for one reason or another, they are missing out on money that can be going into their pockets to be used for whatever they would like. So we want to stress and emphasize that while filing taxes may seem a little bit scary, especially if you've never done it before, there may be money being left behind on the table that could be going into your pocket that you may not even know that you should be receiving. So hopefully a presentation like this can raise the awareness around whether you qualify for the Earned Income Tax Credit and whether you could get that money back in your pocket for free. All right, so the Earned Income Tax Credit, what is it? How much can I get from it? All the important stuff, right? So the Federal Earned Income Tax Credit is considered the nation's largest anti-poverty program and is worth up to $7,830 this year, depending on your filing status and household size. It's one of the nation's largest anti-poverty programs because they're unrestricted and you can use it for whatever you would like. Earned Income Tax Credit, EITC, is a cash benefit for working people who have low to moderate income. The income limit this year is about $70,000. So just to keep that in mind. But it reduces the amount of tax you owe and may also give you a refund. So if you have a tax obligation from working, let's say that's less than what you would be receiving from the Earned Income Tax Credit, that's where you would get a refund and you would get a check in the mail or a direct deposit into your bank account with that refund to receive. And sorry, I misspoke. You would not be getting paper checks this upcoming year. The federal government has discontinued the disbursement of paper checks, so you would need to have a bank account. Under only very certain conditions would you not need to have a bank account to receive a direct deposit for your refund. But they are still working on the best way that they're going to disperse refunds for those who do not have a bank account and are not able to get a bank account. So definitely keep an eye out for that, or an ear out for that. What makes you eligible for the Earned Income Tax Credit, and what factors affect how much you would get back from the Earned Income Tax Credit? So some of the eligibility requirements that we have for the EITC, the federal EITC, would include income, age, residency, and you are required to have a Social Security card. Unfortunately, for all federal credits and deductions, you are required to have a Social Security card for all individuals listed on your return. So that includes you. If you're claiming your spouse or filing married, filing joint, then your spouse would need a Social Security card, as well as all children listed on the return as well. So just keep that in mind for the federal. credits that a Social Security card or Social Security cards are required. Now, what would affect the amount that you may receive for the Earned Income Tax Credit? Some of the factors that affect how much you would receive from the Earned Income Tax Credit include filing status, how many qualifying children you will be claiming, or your household size. Some of the things we will also be going over some of the things that don't affect your Earned Income Tax Credit or your eligibility, and then the other things. Other requirements or eligibility factors that are included for the Earned Income Tax Credit. So specifics of what this looks like. For income, your annual income has to be below about $59,899 to $66,819. And I think that number, the $66,819, is actually a little bit outdated. We had just received an update that it's closer to $69,000-$70,000. So the limit, depending on your filing status. So if you're filing single, it's going to be on the lesser end of that spectrum. But if you're married filing joint, then you have a higher income limit to file for free with free tax prep LA or with other VITA providers. But if you make more than $70,000, most likely you will not be eligible. So if you make less than $70,000, you may be eligible for the federal EITC. For age requirement, you must be at least 25, but under 65 at the end of 2025, which would be the filing year. So in 2026, we would be filing taxes for the 2025 filing year. So if you're at least 25, but under 65 at the end of 2025. And then residency requirement would include having lived in the U.S. for more than half of the year of the tax year. So more than half of 2025 was spent in the States. And then, like we mentioned, you must have a valid Social Security number by the due date of your return for everyone listed on your return. All right. For filing status, one of the things with VITA sites, which are volunteer income tax assistance sites, which VITA is basically a federal program that helps fund these free tax preparation sites for you to be able to file for free. But for VITA sites, you cannot claim the EITC if you file married filing separately, simply because married filing separately is out of scope for VITA sites. So no matter where you go for VITA, if it's the VITA program, you will not be able to claim the credits, any of the credits, or actually be able to file at a VITA site in general if you're married filing separately. However, all other filing statuses we are able to handle. So married filing joint, head of household, single, all of that we do handle. For children, for qualifying children, they must have a valid Social Security number, meet the relationship, age, and residency test. So those are 3 different tests to kind of prove their relationship to you as their dependent, or them being your dependent, their age and residency in the States. Very similar to the eligibility requirements that you would have just as an American individual. However, if they are your child, the age requirement or the age test would be a little bit different. So some of the things that do not affect your eligibility would be pay received for work while you were an inmate in a penal situation, interest and dividends, pensions or annuities, Social Security benefits, unemployment benefits, alimony, and child support. Those types of income would not be included as income that would count towards the Earned Income Tax Credit. So that's kind of just a little bit of the distinction between income that you earn that qualifies for the Earned Income Tax Credit. This would be included in the $69,000 income limit. These types of income or pay would not be included in that limit. Types of income that would be included for the Earned Income Tax Credit include wages, salary, or tips reported on a Form W-2, which would include federal income taxes withheld, income from jobs where your employer didn't withhold taxes, such as gig economy work or self-employment work, money earned from self-employment, there you go, benefits received from a union strike, and certain disability benefits received before reaching the minimum retirement age. So any kind of income received from those types of work would be included in the income limit qualification or eligibility requirements. So anything in those categories would count towards the $69,000 or less income eligibility requirement. All right. Now, for self-employed and gig workers, you guys are in a little bit of a special situation because no one's really withholding taxes for you or keeping track of your tax obligations for you, where an employer would typically be keeping track of that through withholdings. You, as a gig worker or self-employed, would be keeping track of that on your own. That doesn't mean that the work that you're doing and the income that you're earning is not earned income. It is still earned income, and it does still count towards the earned income tax credit income requirement. So for self-employed and gig workers, what you earn is also considered earned income. Income from a job where your employer didn't withhold taxes, such as gig economy work, includes driving a car for booked rides or deliveries. This would include Uber, Lyft, DoorDash, Grubhub, etc., running errands or doing tasks through TaskRabbit, Fiverr, etc., selling goods online, providing creative or professional services, or providing other temporary, on-demand, or freelance work. So if you are doing any of these through any of those platforms or making income, maybe not through one of these platforms, but through services provided that are similar to this, you would still be eligible for the earned income tax credit. Don't think that you are not eligible for it just by nature of you not receiving a W-2. You would still be eligible. So helpful tips if you are self-employed or a gig worker. Documentation is key for a self-employed tax return. Keep records of exact earnings and expenses. We recommend a bank account just for business income and expenses, just so that transactions are really, really easy to see, clear on your statement, and it's just easier to manage on your end to know that your business statement is separate from your personal statement. That's one of the best practices that we recommend for self-employed gig workers who come and file their taxes with us, and we found that very helpful for them. Also, make sure to store original receipts related to your business. Keep track of your mileage and seek help from a tax professional that understands your business or your industry. We have a small business coordinator who specifically helps with self-employed taxes and business taxes here at KYCC. And if you can find an organization or someone, a VITA site who provides a very similar specialization, or someone who kind of is more knowledgeable on self-employed and business taxes, it just makes it easier for you. It provides a learning opportunity for you as well. If you've never filed taxes under that circumstance before, it's really, really great to just kind of learn more and educate yourself through that specialization, through finding someone who's very specific to that. So you can always find someone at KYCC, but also if you visit freetaxprepla.org, our website, many of the sites that we have listed on our website include a small business department or some kind of consultation for their services, most of the time for free as well, since a lot of them are nonprofits as well. So just finding someone in your industry, or maybe who knows business taxes very well, that also helps a lot for sure. And they're on your side. You know, we're on your guys' side. That's the main thing. So, all right. So that's a little bit about the earned income tax credit. We also have the child tax credit for the federal credit side. The child tax credit helps families with qualifying children get a tax break on top of the earned income tax credit. So again, with these credits, you could be eligible for the earned income tax credit and be eligible for the child tax credit at the same time and receive some amount from both. They're not exclusive to one or the other. You can qualify for all of the federal tax credits if that's what your situation entails. So don't think that you can only apply for one and not the other. So you may be able to claim the credit even if you don't normally file a tax return. And for this year, claiming the child tax credit means up to $2,200 per child, depending on how many qualifying children that you claim on your tax return, but you could receive up to $2,200 per child. Who qualifies for the child tax credit? So to be a qualifying child, your dependent generally must have a social security number. This is true for all federal tax credits. Be under the age of 17 at the end of the tax year, so that at the end of 2025. They must either be your son, daughter, stepchild, eligible foster child, brother, sister, stepbrother, stepsister, half-brother, half-sister, or a descendant of one of these, for example, a grandchild, niece, or nephew. So this would be the relationship test that was kind of mentioned before for the earned income tax credit as well. A dependent child or qualifying child must meet this requirement, whether you're trying to claim the child tax credit or the EITC or the foster, and any kind of credit that requires a relationship test with a qualifying child dependent would have to meet this test. So that's basically what they're referring to, is what is the qualifying child's relationship to you. So it must fall under one of these. They must have lived with you for more than half the tax year, so that would be the residency test of your dependent and how they have resided in relationship to you. And they also must be claimed as a dependent on your return and no one else's return. So only one person, a qualifying child can only be claimed as a dependent on a single person's return, or one person's return, whether they're single, head of household, or whatever. They can't be claimed by multiple people. So that's something that that kind of has caused issues before, where maybe a family who has been split, both parents try to claim the child, and that creates issues. So that has to be a conversation that you have, or that one has with their partner or ex-partner, or whatever the situation is, to determine who will be claiming the child, because the child can only be claimed on one return or the other, not both. Okay, so what's changed? In previous years, the child tax credit was a little bit more flexible, a little bit more lenient in terms of who needed to have a social security number or a card. There was a little bit more lenience last year and previous years in having the parents not need to have a social security number. The parents were able to just have ITIN numbers, and as long as the child had a social security number, they allowed the child tax credit to be claimed. However, for this year, they've changed the policy on mixed status families. So now at least one of the parents claiming the child must also have a social security. So rather than both parents being able to have an ITIN and still be able to claim the child tax credit, now at least one parent must have a social security, as well as the child must have a social security card in order to be eligible. So they made it a little bit more difficult for mixed status families to claim the child tax credit. But just know that this is just on the federal side, and on the state side of the credits, you're still eligible to claim the state credit version of the child tax credit with an ITIN and not with a social. So, but that is something to keep in mind if your family, or if you know somebody who has historically been able to claim the child tax credit with an ITIN. Just know that this is a change that's been made for this upcoming tax year. All right. Okay, so for federal tax benefits, we've gone over the child tax credit, the earned income tax credit, and a little bit very basic information on what you might be receiving back from those credits. But this is a table that shows you more concretely how much you would be getting back from the credits based on your filing status and the amount of qualifying children you claim. So if you're single or head of household, these are the income limits that you would have to adhere to. So if you're single, the max amount of income that you can have for the 2025 filing season is $61,555, and that's assuming that you have 3 or more qualifying children. That's what your max amount of income would be for you to be eligible for these credits. If you're married filing jointly, you have slightly more leverage for your income in order to be eligible. So if you have 3 or more qualifying children and you're filing joint, your income limit is right at about $69,000, or to be specific, $68,675. Each VITA site has their own income requirement, eligibility requirement. Some are more flexible than others, so I would definitely take a look and see different sites to see if maybe there's one who fits your income better than another. Don't feel like you're limited just to the numbers that you see on the screen. So yeah, those would be the income limits. And then let's say if you had 3 or more qualifying children, the maximum amount of the earned income tax credit that you could receive is $8,046. So even if you have a 4th or 5th or 6th qualifying child, you're capped out at $8,046. You won't be receiving more than that for each additional child. However, for the child tax credit, like we mentioned before, it can be up to $2,200 per qualifying child, with that specific amount per child ranging based on other factors. Of course, after the 3rd qualifying child, every additional child is going to be a little bit less or a little bit different situation. You may not receive the full $2,200 per child. Even for the up to 3, you may not receive the full amount, but you will receive some amount of the child tax credit per child. So the child tax credit is a little bit different in that it doesn't quite depend on your filing status or your it's not exactly based off of just your filing status and your number of other number of dependents. It may depend on that a little bit, but you will get some amount no matter what. Okay. All right, and then for education credits, these are credits to motivate you, incentivize you to continue with higher education, to help with the financial load of pursuing higher education. So basically, it's the federal government's push to let you know, like, hey, if you want to pursue higher education and you want to go to grad school and you want to do this and you want to do that, we can help you at least a little bit, at least a little bit. So there are 2 different credits that you can apply for. One, we typically try to encourage prospective students or current students to claim before the other, simply because one does have a refundable portion of the credit, which means you may get whatever portion of the refund that exceeds how much you owe, you would get that as unrestricted funds for you to use. Whereas the lifetime learning credit, it's just a credit that may reduce the amount of tax you owe. You may not necessarily get a refund out of it. So those are the 2, the American Opportunity Tax Credit, which has the potential for you to receive a refundable portion, and then the Lifetime Learning Credit, which you wouldn't receive a refundable portion, but is a little bit more applicable to certain situations. So let's get into it. Who can claim an education credit? So you must meet all 3 of the following for both credits to even consider applying for or claiming the credit. You, your dependent, or a third party pays qualified education expenses for higher education. So that means you guys are paying for university, grad school, or whatever. So there is some kind of payment being made. An eligible student must be enrolled at an eligible educational institution. So these are accredited universities or schools, and most likely if they are an eligible education institution or accredited school, they will be sending you the forms that you need in order to claim the credit. Or, if there's an online portal, if you haven't received a letter from the school itself, an actual physical letter, it may be through the portal that you use to log in with your student ID or student account, and your tax form should be in there. Also, the eligible student is either yourself, your spouse, or a dependent that you list on your tax return. They have to be related to you. The student has to be related to you, or you should be the student. There needs to be some kind of connection to you and the tuition that is being paid to the school. So that's basically what that statement says. You either you're the student, your spouse, or a dependent that you're claiming must be a student. So. Okay, so what forms do you actually need to have, or what do you need to look out for, keep track of in order to claim the most that you can claim through these education credits? So it is definitely good to have your college financial account statement, excuse me. Any receipts for books, computers, and other required course supplies, lab, software, etc. Those could be claimed as deductions to your tax obligation. Things that won't apply to this would be like if you paid parking, or if you got a parking ticket while you were attending a course or a class. Unfortunately, expenses like that are not included, are not deductible, but actual required course materials may be deductible. So definitely keep track of any receipts for that. And then finally, the actual physical form that may be received in the mail or that you may be able to access through an online platform would be the Form 1098-T from your institution. And this would include how much tuition is being paid, any other kind of deductions, and how this may affect the credit that you will receive from either the American Opportunity Tax Credit or the Lifetime Learning Tax Credit. So for the American Opportunity Tax Credit, some of the eligibility requirements are that it only applies to the filer's first 4 years of higher education full-time towards a degree or certification, and that's up to a $2,500 benefit, 40% of which could be refundable, so you could get up to $1,000 of that $2,500 credit as a refund into your pocket. So unrestricted funds for you to use towards whatever you would like. And that's why we also push the American Opportunity Tax Credit to be claimed before the Lifetime Learning Credit, because it's really the American Opportunity Tax Credit that's supposed to be used first, since it really only applies to the first 4 years of higher education at an accredited university or institution, and includes a refundable portion. So once you have used the 4 years of AOTC, or if you've fully claimed the American Opportunity Tax Credit, that's when we can start telling you, okay, if you want to continue education from there, or you're looking to get another separate certification, or maybe something smaller, that's where you would look at the Lifetime Learning Credit. So the Lifetime Learning Credit counts for all other higher education, including part-time or just to improve your skills, and that's up to a $2,000 benefit without a refundable portion. So this would be purely to reduce the tax obligation that you owe, but may not come back to you as unrestricted funds that you could use for whatever you would like. So if it's part-time, purely part-time, then of course your only option really is to apply for the Lifetime Learning Credit. However, if you are considering higher education full-time, and it's the first time that you're pursuing this, or if you've pursued it in the past and you haven't ever claimed any kind of credit, definitely look into the American Opportunity Tax Credit. Even if you don't go to a free Tax Prep LA site, if you go to a different VITA site, go to a free prepare, just let them know, just ask a question and be like, hey, I'm thinking about going back to school, and I recently heard at a workshop that there's a credit for students, or what might that be? What does that look like? And just opening up that conversation with the tax preparer also helps you figure out what can come out of that situation for you that works for you and best fits for you. So always great to ask questions now that you know what you may be eligible for, and definitely better to take a shot at it rather than just assume that you're not eligible for it. So it's always good to kind of have that conversation. But yes. Okay, so a little bit more about some other credits and deductions. We mentioned the paid student loan interest. So you can get a deduction on the amount of tax that you owe if you have paid some portion of your student loan interest. So student loan interest is interest that you pay during the year on a qualified student loan. It includes both required and voluntary prepaid interest payments. You may deduct the lesser of $2,500 or the amount of interest you actually paid during the year. So if you know already that you have student loan interest that you've paid throughout the year, whether those are payments that you decided to proactively make, or they were already required of you, then you know for sure that you have some amount to be deducted from the taxes that you owe simply by having paid the student loan interest. So I would keep an eye out for a 1098E form, and reach out to the IRS if you know that you should be receiving that form and haven't received it yet. Also, for the American Opportunity Tax Credit and Lifetime Learning Credit, like we mentioned, to claim either credit, you must have received a Form 1098-T from an eligible educational institution, whether domestic or foreign. Generally, students receive a Form 1098-T from their school by January 31st, so most students should have received one in the mail, generally by mail by now. If not, definitely double check with the online portal, and if it's not there, then definitely contact your school's I think it would just be the financial office at the school, but definitely contact them to see if there's anything that's not going right there. Yeah, but it should have, all of the forms should have been dispersed by January 31st. So if that's something that you feel like you should have received, now is a good time to start asking questions and see where you could find the forms if you haven't had them yet, if you don't have them yet. All right, so now on to the state tax credit and deductions. It's going to sound very, very similar to the federal credits that we just mentioned, but they are more accessible simply because many of the credits that we have just for the state of California, you're eligible to claim just with an ITIN, an individual taxpayer identification number. You don't necessarily need a social security number. So they are by nature more accessible than the federal credits because of that. So, but like I said, they're going to sound very, very similar to the federal credits, and you'll see very, very shortly we've got the the individual taxpayer identification numbers are what make California state credits so great, so accessible, and why so many more people are able to claim them over federal credits. But they include the California Earned Income Tax Credit, which is just the federal Earned Income Tax Credit, but California's version of it. We have the Young Child Tax Credit, which is California's version of the Child Tax Credit. And we have the Foster Youth Tax Credit, which is a credit specifically designed for foster youth, transitional aged youth who have been in the system or who have gone through the system, which is really, really great. Just support for that demographic in general. So these are some of our amazing state credits that you are able to claim even if you don't have a social security number. So how are state credits different from federal credits? Well, state credits vary by state and are tailored specifically towards the needs of each state's residents. For the state of California, a majority of the credits offered allow you to apply as long as you have an individual taxpayer identification number, otherwise known as an ITIN. Last year, Free Tax Prep LA assisted over 300 individuals apply for an ITIN so that they could claim credits like the Cali ITC and the Young Child Tax Credit. And it's not really mentioned explicitly here, but it's implied that many of those individuals or families may not necessarily have been able to claim the federal side of those credits, but they were able to claim the California side, which is really great. So what is the individual taxpayer identification number, and how can a resident of California use the ITIN or apply for an ITIN to claim credits that they may not be able to claim without an ITIN? So ITINs are used specifically just to file your taxes. An ITIN is only issued when an individual files their taxes. It cannot be used for proof of employment or employment purposes. It's for those without a social security number, and it's, like we said, specifically to be tax compliant and to meet your tax obligations. So taxpayers that do not have a social security number may report income and pay taxes with an ITIN when they would normally otherwise not be able to opt into that. So how to apply. To receive an ITIN, taxpayers need to complete a Form W-7 with their tax return and include proof of identity and proof of foreign status. So applying for or renewing your ITIN or completing the Form W-7 is somewhat built into the process of filing your return in general. At a VITA site, or at a free tax prep LA site. This is very, very much integrated into the tax filing process and is included at no additional charge. For many paid preparers, they would require an additional $300 to $500 for you to even complete the Form W-7 and for you to complete filing your taxes with them in order for them to send your return to the IRS. This is exactly what we're trying to help you guys avoid for anyone who's looking to apply or renew their ITIN with their tax returns this year. Is just know that there are sites in California or in Los Angeles available with appointments available for you to access that resource for free without having to pay anything additionally. So definitely don't need to pay. It is part of the tax filing process. So once you go to your appointment, it will most likely be done while your taxes are being prepared with you right there. You'll be part of the process. And this kind of workshop is just for you to know what you need to bring and how to be best prepared for an appointment where you plan on renewing or applying for an ITIN. So this is what the W-7 form looks like. We're not going to be going through the form line by line because that's something that you'll be doing with your prepare at a VITA site or at a free tax prep LA site. But for your own awareness, this is what the form would look like. You don't necessarily need to bring the form with you to your tax return. If you're the type who likes to be extra prepared, and of course, you can have one printed and bring it with you, but the VITA site or the Free Tax Prep LA site will have one on hand or be able to print one for you if needed. But some of the things that you do need to have on hand for your appointment when you are applying, one, a valid federal tax return, which will be completed at the site, most likely, a completed W-7 form, which will be completed or a preparer will help you complete that at a tax site. And then proof of identity and foreign status. Now, these are the forms or kind of the papers that you will need to bring on. These are your responsibilities, your obligations to bring to the appointment in order for everything to go smoothly. So what counts as proof of identity and what counts as proof of foreign status? So a passport proves both identity and foreign status, and this is the only document that actually can be used as proof of both. So even though it's a singular document, it's the only one that can be used as both proof identity and proof of foreign status. So if you have a valid passport, you can bring that as proof of both. However, there are other documents that you can bring or choose to bring that will only verify proof of one or the other. So for proof of identity, you can bring your national identification card, which must show your photo, name, current address, date of birth, and expiration date, a foreign voter's registration card, your visa, a U.S. Citizenship and Immigration Services or USCIS photo identification. All of those you can bring, and you need to bring the original, and that would count just as proof of identity, just for proof of identity. If you bring any of these documents as proof of identity, you will also need to bring another document that will prove your foreign status. So you would be bringing two documents to your appointment. Proof of foreign status documents include your U.S. driver's license, foreign driver's license, U.S. state identification card, or a U.S. military identification card. So all four of those would count as proof of foreign status. If you do decide to bring any of those, you would also need to bring one document from the proof of identity column. So your passport, just your passport, will work as both, and you could just bring your passport. If you don't bring your passport, then you need one proof of identity and one proof of foreign status originals to your appointment. So that's how you can prepare yourself to apply for or renew your W-7 form or your ITIN once you have gone through your tax return with the preparer, or while you go through your tax return. For dependents, if you are including your dependents as part of the application system or as part of the process, for applying for ITINs. They must have a civil birth certificate if they're under 18 years of age, medical records if they're under 6, and school records if they're under 14, under 18 if they are also a student at that time. So these are all the forms that you would need to bring if you are planning to renew or apply for your ITIN, and maybe even if you didn't necessarily state that while you book the appointment, if that's something that you're worried about, if you don't have a social security number and you want to be tax compliant, and maybe that might include applying for an ITIN, definitely keep these or have these documents on hand just so that the process is a lot easier for you and you can get it done in one sitting rather than having to go get your documents, come back, set up another appointment, just so that things go smoothly. But yes, you do need proof of identity and proof of foreign status if you're not using a passport. So that's the most important thing. Okay. Oh yes, original documents. That's also another thing. Okay, so we talked about the earned income tax credit, and we've talked about all the other federal credits, and we talked about what makes California credits with the ITIN, right? Being a little bit more accessible with the ITIN. But what makes these credits different from the federal credits that they are designed around, right? So the California earned income tax credit can be claimed by taxpayers with ITINs. So this accessible credit is worth up to $3,644. And this can be claimed in addition to the federal credit. So if you've already claimed, you've gone through the federal side of your tax return and you already know you're eligible for the earned income tax credit, just because you claimed, let's say, the full amount of the earned income tax credit, which is about $8,000, even if you were eligible to claim all $8,000 of the earned income tax credit, you could still be eligible to claim the entire California earned income tax credit amount, depending on your situation. The $3,600, you could still be eligible to claim the entire amount of the Cali ITC as well. So combined, your return would, that already by itself is about $11,000 of unrestricted funds into your pocket, which is really, really crazy. And it's something that a lot of taxpayers and filers don't realize that they can claim on their tax return, which is why workshops like these are so important. But they are not mutually exclusive. You can 100% claim both federal side and California or state side credits. And that's why awareness of these credits is so important. So to qualify, you must live in California as your main home for more than half of the tax year, which makes sense. Can't be living in New York for 9 months out of the year and hope to claim these amazing California credits. You must be a California resident for more than half the year to be eligible to claim. So we got very similar eligibility requirements. There's going to be the income, age, residency requirement. Social security card requirements are going to be a little bit more flexible since we allow for you to qualify with just an ITIN or individual taxpayer identification number. But we're also going to go kind of very similarly to how we approach the federal credits. We're going to see how filing status and qualifying children affect how much you would get back from each credit, and what would be included as earned income for the credit and your eligibility towards the credit as well. So income, your earned income must be at least $1 and no more than about $31,950. This is where the state credits differ from the federal credits because the income limit is just a flat limit. It's not based on how many children you have or your filing status. It's going to be $31,950 across the board. So if you make more than that, there's very, very little wiggle room. You're either eligible for it or you're not when it comes to income. For age, you must be at least 18 years old or have a qualifying child. So if you do have a qualifying child, the age requirement is a little less than 18, but if you do not have a qualifying child, then you must be at least 18 years old. Residency, we covered already, but you must have lived in California for more than half of the tax year. And for Social Security requirements, you can have a Social Security card or an ITIN for you, your spouse, and any qualifying children on the return. All right, so filing status. You must meet some extra conditions For example, if you have a qualifying child who lived with you for more than half the year to still qualify, that would be specific to the Young Child Tax Credit. You can't claim the Young Child Tax Credit if you don't have a qualifying child living with you. However, for everything else, your filing status typically doesn't change how much you would be receiving back from the credit. What a qualifying child entails would they would either need a valid Social Security or ITIN and then meet the relationship age and residency test, very similar to the child tax credit that we mentioned for the federal side. Earned income would not include pay received for work while you were an inmate at a penal institution, interest and dividends, pensions and annuities, Social Security benefits, unemployment benefits, alimony, and child support, almost exactly the same as what would not be included for the earned income tax credit as well. So income from any of these categories would not be included as income for this credit in terms of the income requirement or eligibility. And then what income does include is wages, salary, or tips reported on a Form W-2 with federal income taxes withheld, income from jobs where your employer didn't withhold taxes, money earned from self-employment, benefits received from a union strike, and certain disability benefits received before reaching the minimum retirement age. So pretty much the exact same as what would be included as earned income for the federal side as well. So income and the definition of what income is for the earned income tax credit basically follows the same for the state credit as well. So California earned income, the earned income part or definition of that is the same. All right, so the Young Child Tax Credit, very, very similar to the child tax credit, but more accessible and has more flexibility with the income requirement as well. So if you qualify for the Cali ITC, which means you make less than the $31,950, you qualify for the Young Child Tax Credit as long as you have a qualifying child. You must have a child under 6 years of age as of the end of the tax year, so that would be by the end of 2025. And claiming the Young Child Tax Credit means an additional $1,154 on your return. You and your dependents must also have valid Social Security numbers or individual tax identification numbers. So Social Security or ITIN for the Young Child Tax Credit. What's amazing about the Young Child Tax Credit is even if you have zero income, as long as you have a qualifying child, you can claim the Young Child Tax Credit. So I know this sounds a little bit counterintuitive because for Cali ITC and the Earned Income Tax Credit, it's based around this idea that you need to have earned income, right? Well, for the Young Child Tax Credit, that's where there's that little wiggle room of if you make between $1 and the $31,950, the $1 truly is for the parents who are trying to claim the Young Child Tax Credit, and we can put in kind of this $1 discretionary income for you to qualify even if you have no other income to report. So there is a way to receive the credit for the Young Child Tax Credit as long as you would typically qualify for the Cali ITC otherwise, and as long as you have a qualifying child or dependent to claim for the Young Child Tax Credit as well. So that's one of the myths about, a lot of people thinking I don't make enough to file, I'm not going to get anything back anyway, or I'm not really making any money. There may be certain situations where filing may benefit you even without any kind of earned income. So it's always good to try and try to meet your tax obligations, even if you don't think you'll get anything back. There may be a chance that you may be qualifying for something that you didn't know about. So, all right. So the foster youth tax credit, I think, is a very beautiful tax credit that's supplied or that's funded through the state of California and the Franchise Tax Board. It's not provided through the general federal, the IRS, through the IRS itself, or through federal funding. So specific to California, and I think it's great. To be eligible, you must be between 18 and 25 years old at the end of the tax year and must have been in foster care at age 13 or older and placed through the California foster care system. So the income limit would be if you qualify for the Cali ITC, which would be the same $31,000, then you are able to claim the foster youth tax credit. This means as long as you make below the $31,950 annually, and you have proof that you had been in the system, then you qualify. All right, so some of the forms that you need or status that you would verify to claim the foster youth tax credit, well, you would need to verify your foster youth status. So you would fill out FTB 3514 form. So that's a form specifically through the Franchise Tax Board, and that you could look up, and it should be available online for you to print or fill out. And then you would add your foster youth verification letter when paper filing. That youth verification letter would be a county issued letter for you to receive. If you need support accessing alternative documents, if you are between the ages 18 and 20, you may contact your case manager in the independent living program with the email provided there. And then if you're between the ages of 21 to 26, you may contact the Office of Foster Care Ombudsperson at the number listed or at the email listed. So if you have any questions about how to access these documents for you to claim these credits, then I would definitely reach out to the emails and phone numbers provided. Just keep in mind, and we'll go over this a little bit later with the myths and misconceptions as well, but you can claim credits retroactively. So if you find yourself thinking like, oh, I filed last year and the year before that, and I never claimed the foster youth tax credit, but I have all the verification, I have all the PIC forms that I need to prove that, I meet all the requirements. You can definitely go back and amend your previous year's tax returns to include this credit if you have missed out. And that applies for any other credit that you haven't, that you feel like you were eligible for and you didn't claim in past years. You can go ahead and amend your previous year's tax returns and claim those credits to receive them this year. So that's true at any Free Tax Prep LA site. We'll kind of go over that with the deadlines in another slide, but just food for thought. If you're realizing, hey, I should have claimed this earlier, you may still be able to claim it for this year's tax return. So yes, but just make sure if you are trying to claim the foster youth tax credit that you must provide consent to verify your foster care status. So yeah. All right, so very similar chart to the federal tax benefits chart, but as we can see here, the maximum income to be eligible is going to be just the straight $31,950 across the board. Doesn't depend on your filing status at all. Your California Earned Income Tax Credit amount will be dependent on your qualifying children that you claim. The Young Child Tax Credit, of course, is entirely dependent on if you're going to claim any qualifying children on your return. And the biggest difference, I would say, between the state and federal credits are for the Young Child Tax Credit, it's a flat refund amount. It's $1,154 regardless of how many children you're claiming, as long as a qualifying child is being claimed. Whereas for the federal child tax credit, it is dependent on how many children that you claim and how much you would be getting back from that credit. So for the state side, if you're going to claim a qualifying child, whether you're going to claim 1 or 3 or 5, it's going to be a flat $1,154 back on your return, regardless of how many children are being claimed. And then with the foster youth tax credit, very similar to the young child tax credit in that you're either a foster youth, you can either claim it or you can't. The amount will not change. So if you are eligible, you will receive $1,154 additional credit on your return. If not, then you don't receive any amount. And this does not depend on your filing status or the qualifying children that you claim. So maximum amount that you could receive for the California Earned Income Tax Credit would be $3,644, which, just for if you claim all of the Earned Income Tax Credit and all of the California Earned Income Tax Credit, both of those combined would be about $11,000 on your return just for the Earned Income Tax Credit. So pretty hefty amount of money that you could get, as long as you're aware of what you're eligible for and what you can qualify for. And sometimes that can include asking your preparer a question and letting them know, hey, I think I'm eligible for this, and you don't have that on the return. So even asking a simple question can help you get more on your return, as long as you know what to look for. So that's kind of what we're trying to promote with these workshops. So All right, now some myths and misconceptions about taxes. These are going to be very, very simple, very, very general. We're not going to go too much into the specifics, but these are some of the things that we do see year after year, and we want to make sure that you know the truth and you're not just being led by misinformation, So a lot of the things that we hear are people saying, oh, I don't make enough to file taxes. I'm not going to get a refund. So why would I file anyway? Just through this one workshop, hopefully, maybe some of you realize, hey, actually, there are some credits I didn't know that I was eligible for, and I should have filed in the past couple of years. That's what we hear a lot too, is you're most likely owed a refund, and you most likely qualify to file for free as well. So obviously, if somebody makes, 6 figures, 7 figures, then they can be taken care of with a paid preparer. They have more than enough to afford that, I think. But if you make less than $70,000, then you are eligible to file for free, and most likely will receive more cash back in the credits that you are eligible for without having to pay anybody. So if you're ever under the impression like, I didn't make enough this year to file and it won't be worth it to file for me, I'd say it doesn't hurt to file, and you may receive a refund you didn't even know you were going to get. So another misconception that we hear is that tax refund money is income and people are worried about their benefits being affected. Refunds are not considered income and do not impact your public benefits. This was covered very, very briefly when we went over kind of what is included and what's not included in the definition of earned income, but the tax refund itself would not be included under that definition of earned income. They're unrestricted funds that are not earned and can be used for whatever you'd like to choose to use it for, and it does not affect your benefits at all. So we just want to make sure people are aware of that. The tax refund in no way will hurt you or the resources that you have around you. And then another misconception is you can't file if you missed a year. People think, oh my God, I didn't claim that credit last year, or I didn't end up filing because I didn't think I needed to, but now I'm realizing I could have gotten so much money. You may still be able to claim that money up to 3 years after the tax deadline. So for 2026, we are filing for the 2025 tax year, and if we take 3 years from that, technically any years that you missed between 2022 and 2025, you can retroactively file or make any amendments to the returns that you filed in the last 3 years if you feel like you missed out on any credits that you should have received. So never feel like it's too late. You do have a couple of years, and this is only, of course, if you expect to receive a refund. We're telling you, like, you should go back and of course make sure you get those. If you are expecting to owe for those years, of course you definitely should file still as well. We're not going to tell you to not file, but it'll be not as fun, not as happy. You're not going to be getting a refund. Most likely you will have to pay with interest, but just know you can still retroactively file regardless of whether you owe or not. All right, so some important tax documents to keep in mind. We've kind of covered some of these already, but these are the main ones to keep an eye out for in the mail, or if you haven't received this from an employer, then maybe ask HR or ask somebody who may know where to find these, because you definitely do need these to file your taxes. Form W-4, your employee's withholding certificate, is not typically necessary for you to actually file, but it's a good form to get to know your way around, know how to navigate, know how to fill that out, simply to know how much taxes that you're paying throughout the year, and to make sure that you're meeting your tax obligations. If you receive a W-2, or if you're working if your employer is withholding taxes for you, this would be your way to keep control over how much they are withholding and how much they are helping you pay or meet your tax obligation. The Form W-2 is the biggest one that we receive, the most common one. This would be the form that you receive from your employer with, your gross, your annual wages and how much was withheld for Social Security, for disability, all that stuff. This would be the main form that you would be coming to your tax appointment if you are not just a self-employed contractor. This is if you're working with an employer. And then Form 1099 NEC would be for independent contractors. Definitely a form to look out for if you're not your typical, working under an employer. This is if you're a gig or self-employed. Definitely very important to have. You can't show up to your tax appointment without it, because this would be your version of a W-2, basically. Okay, and some best practices around important tax documents. Organized tax records make preparing a complete and accurate tax return easier. It helps you avoid errors that lead to delays that slow your refund, and may also help you find overlooked deductions or credits. We typically tell clients to just keep a tax folder, for all documents that they receive regarding their taxes or regarding their employment status or anything like that, as things change throughout the year. Even marital status changes actually help keeping track of in a little tax folder. But definitely staying organized makes things feel much, much less stressful as tax season approaches, and that's kind of what we want to do. That's what our main mission is, to reduce that stress, to make taxes feel more manageable and more positive thoughts around filing. We want people to associate filing taxes with receiving a big refund, not with filing. We don't want to associate filing with, oh my God, I need to find my forms and I need to book an appointment. So staying organized definitely helps mitigate that. And it can be more focused on, hey, I'm about to receive $10,000 on my refund. And that's where we want the focus to be. So being organized and knowing about the deadlines definitely helps. So speaking of deadlines, if you are getting a refund and are expecting to receive money from the state or from the IRS, if that is the case, then tax refunds can be claimed up to 3 years after the filing deadline without any kind of fee involved. So while it is best to file on time or even early, if you file late and are owed a refund, the IRS pays you interest on what they owe you, right? And this is only if you're so on top of your taxes, you know how much is getting withheld every paycheck, you know what your tax obligations are for the amount of income that you're making, and you know for sure that you're going to get a refund, then the deadline can technically be give or take 3 years, right? However, if you're expecting to owe, which means maybe you're not so on top of your refund, maybe you don't know exactly how much your tax obligation is for in relation to your salary, and maybe you're not withholding enough with your W-4. If that's the case, then taxpayers who owe and do not file will be charged a penalty for not filing, and that penalty can stack up to be quite a considerable amount, because that accrues monthly. As soon as you miss the deadline, then each month it'll be like, hey, you still haven't filed and you owe, and you still haven't filed and you owe. So that's something that can get really, really messy if you're not aware of it. So if you do not file on time and owe money, you will have interest charged on what was owed. So it's kind of a very delicate line to ride if you're not super sure on your tax obligation, whether you should file or not. However, we are kind of seeing a trend more recently that if you really do know that you are going to be getting a refund, if you've historically for the past however many years have always received a refund, and for some reason or another this year you feel more hesitant to file, then we're not pushing everyone necessarily to file at all costs. In previous years, we've always told people, hey, you should file no matter what, file early, file as soon as you can. No matter what happens, it's something that you should always do no matter what. However, for this year, we are changing our messaging just a little bit to let you know that you should make an informed decision to file. So as long as you know exactly the consequences of what it means to not file for this year, and you on your own terms, after your own research, have decided that that is the path that you would prefer to not file this year, or maybe to delay filing. We just are pushing for people to make a more informed decision rather than to really push filing at all costs. So that is a change for this year. Definitely do your research. If you are expecting to get a refund, you do have up to 3 years to file after the filing deadline. But if you are expecting to owe, definitely don't wait to file, or apply for an extension as soon as you can if you don't think you can make the deadline. So, okay, so assuming that everything goes according to plan and nothing with any natural disasters happen or any rain or anything like that happens, then the tax deadline is April 15th with the extended filing deadline at October 15th. So definitely keep that in mind. Mark your calendars. For 2026, the tax filing deadline is April 15th unless there's some further notice about California being extended. So, okay. All right, we're kind of heading to the very end of things, but we're going to leave you off with some tax tips and some other resources for you, other free resources for you. So just a little bit longer here, but like we mentioned, collect tax documents, have a plan, and file early. Being organized is the best way to reduce stress. You know where everything is, you know where everything needs to go, and that already deals with half of the battle of your appointment. So, to schedule an appointment with a tax professional as soon as you can always go to freetaxprepla.org to find a tax site, a VITA site near you. And these VITA sites are completely free with very, very knowledgeable IRS certified volunteers to help you file. And they will do as good as I or better in educating you and supporting you with filing your taxes. So definitely trust in them. I trust in them. It's really, really a great collaborative. So. 3, IRS delays are expected now more than ever. The IRS is pretty short-staffed these days, so don't get too worried about if you haven't received an update, or if you don't see your tax return or your refund as early as you would have maybe seen it in previous years. But the best way to make sure that you will get your refund as early as possible would be to use e-file or direct deposit, especially this year. Paper checks are not going to be dispersed anymore. So if you have a bank account and direct deposit is okay, then that would definitely be pretty much the only feasible way to get your refund. If not, it would be through these prepaid debit cards, which they're still trying to figure out the best way to disperse those in place of paper checks. So definitely having that direct deposit option is the best case scenario. And then 4, confirm that your tax return was accepted by the IRS and the State of California Franchise Tax Board, which you can easily do online, and just staying on top of it, keeping yourself informed on the process and each step just helps for you to feel comfortable and for you to not feel so much anxiety about where your return might be or what the status of that is. So taking these proactive steps to keep yourself informed, aware, and just educated on every step of the process always helps. That way you don't need me, you don't need Free Tax Prep LA. You can do it on your own. We're here to provide support for you. All right. Scam prevention, also, this is very, very important these days now more than ever, where misinformation can spread like wildfire through social media, and a lot of people will, a video will go viral and it turns out it doesn't have all the correct information. So definitely some things to look out for as we are in tax season and and as technology just kind of continues to grow with the impact that it has. So top common tax scams to watch out for: identity theft, fraud. We can erase your tax debt scams, ghost tax preparers, phishing and smishing, and fake IRS online account help. Of course, that file a return using your Social Security or ITIN to steal your refund is not something too new. That's been happening, and the IRS actually has its own stops to prevent that, like using your IP PIN or the IRS IP PIN that's stated there. That's specifically to help prevent identity theft fraud. So having that PIN set up or being willing to set that up, your appointment will help you avoid these scams. For we can erase your tax debt, promoters promise to settle your tax debt for pennies on the dollar, even if you clearly don't qualify. Then they charge upfront fees and vanish. Those are kind of the things that we're trying to mitigate as a free service that's being offered. Is we're not trying to convince you like to pay less than you would for a paid preparer to get certain credits. We're very upfront that everything is for free and should be free for a certain income limit, and there's no caveats with that. That's what we do. We're federally funded to do this work, and as a nonprofit, that's what we take pride in. So we're not trying to save you pennies on the dollar. So definitely be careful of that kind of language. I know free for free tax prep LA, a lot of people we've gotten feedback where it's like, well, free also sounds like a scam, which is fair, but just definitely do your due diligence and do some research if you hear any other kind of language that makes you feel like, oh, is this too good to be true? What's going on here? So definitely be willing to do that research. Don't just take everything you hear with a grain of salt. And then for ghost tax preparers, preparers refuse to sign your return or inflate your refund to charge more. I mean, that's pretty much why we try to push you to not go to a paid preparer if you do meet our income requirements, because there's a lot of things that could go wrong when you go to a paid preparer. Not to say that everyone out there is a villain, but it is a business, and there are certain practices that we have seen where the preparer is not always on your side or trying to do things for you necessarily. So that's also something to look out for. And that's just kind of gonna be the case no matter where you go, unfortunately. Having some awareness and education on your own situation is gonna be the best defense that you have against any of these scams. So definitely being aware and being educated helps. Phishing and smishing, very, very similar and has been going around, but fake IRS emails or text promising refunds or threaten arrest. Any kind of suspicious text these days, you got to be really, really careful for. And during tax season, it's even worse. So just keep your guard up during this time now more than ever. And then some other common tax scams to watch out for: too good to be true refund promises. Be very careful with your W-2 form. There's a lot of sensitive information on your W-2, and your W-2 is what can be used to actually file your refund for you. So if you're sending someone a picture of your W-2, or if someone's giving you a picture of a W-2 that doesn't look correct, I'd be very, very careful. Anything that if it's a call from the IRS, but the number doesn't line up, all those little small details, definitely do your due diligence, because the time for those kinds of scams is now. It is time sensitive, so just have another eye out for that, another eye and another ear out for that. Okay, so if you feel like there has been you have been part of a scam, or someone has scammed you, or someone has maliciously filed your taxes for you, we do have connections to low-income taxpayer clinics. These are also funded federally, and they are completely free legal aid resources for you that are specific to taxes. So some of the locations and phone numbers that we have listed here. You could take a quick screenshot, or you could just look up low income taxpayer clinics, or LITC IRS locator, and on the actual IRS website there will be a locator for you to find the closest LITC to you. All right, some other resources to file your taxes for free. IRS Direct File is actually not available anymore. They took that down just in the past couple of months. So unfortunately, you will not be able to use an IRS platform to file, but CalFile is still available to file your state taxes. And United Ways, one of our partners for the collaborative, also has their own free online tax filing service. So you don't have to necessarily go to a VITA site if you don't feel comfortable. You could also file for free with United Way, and that's with myfreetaxes.com. We also have the Get Your Refund website, which is another community-based organization, and they provide this free tax service throughout the United States, not just in California, but basically it's remote VITA help, so also done by VITA volunteers who are IRS certified, completely capable of filing your return safely and securely and correctly, and that will be at www.getyourrefund.org. All for free, no charge at all, no fee. And finally, we are here to support you. Free Tax Prep LA has over 30 different locations, both online and in person, for you to file, book an appointment, do walk-ins, and we are now pretty much in the thick of tax season. So go visit www.freetaxprepla.org to find a location closest to you to file for free. Don't go to Pay Prepare, especially if you fall in our income requirement limit. You don't need to be paying someone to file your taxes for you. We can get you your entire refund in your pocket for you to do whatever you'd like with, without the $300, $400 charge. So that is going to be it for me. I think we have a few minutes at the end. I would have liked to have a little bit more for questions. I'm sorry, I tried to go as fast as I could, but we do have some time for questions here at the end.
Yes. So if anybody from the audience has any questions, please go ahead and put them in the comment box. But if you don't, I actually have a few based on the presentation that Taylor gave. Some amazing presentation. Thank you, Taylor.
Yeah.
I actually, you mentioned a few things. Something about amending your taxes.
Yes.
So if you amended your taxes once, how many times, or if you can, how many times can you amend your taxes for previous years?
As far as I know, there is no limit to amending the tax return, as long as the goal is that you want it, because really the IRS cares that it's done correctly, right? And if there's any mistakes in a previous year, within the 3-year deadline, a post filing date deadline, if there's any corrections that can be made to improve the accuracy of the return, then they will accept it. Yeah. So we've had people who've come in for multiple amendments on that year because they got it filed with somebody and then they went somewhere else and then that place amended it, but they didn't amend it correctly. So then they came to us and then we did another amendment. And that's all gone through. So there hasn't been any issues.
Okay. And by any chance, do they owe taxes every time that they
No. Most of the time when they are seeking this amendment, it's because at some point they've realized, like, hey, I was supposed to get a credit that I didn't receive initially. So a lot of the times the amendments were for them to receive more on their refund, actually.
Okay. So, all right. Yeah. Because you said you can amend, and I was like, wow. So how many times can you amend? I didn't realize you had an opportunity to do that.
Yes.
Oh,
yes.
okay. That's
I mean,
great.
as long as there is something that was done wrong.
Oh,
yeah.
Okay.
Yeah.
All right. So we're getting close, and okay. All right. So this one, I know. I mean, granted, I know some people who get audited and whatnot, and they have, of course, to fix their records with the IRS. Now, that is a question that I've had a few patrons ask, and even some of our staff members. When you get audited, how do you know you're being audited? How do you get audited by, or how do you officially receive notice from the IRS?
That's a good question. I I can get a better answer from someone who's more specialized, like our low-income tax clinic attorney, but from what I know is that you would receive a letter from the IRS letting you
Okay.
know. Yeah,
Okay.
because there has to be some kind of disclosure on why your information is someone's going through your information. So
Okay.
typically when anyone receives a letter from the IRS stating that they're being audited or that there's
Mhm.
potential for them to be audited, we send them directly to LITC. No
Okay.
questions asked. Yeah, to help not only to just have that support, but also the LITC attorney is able to read the letters with more kind of discernment than we can.
Mhm.
So they know really what the letter is trying to say better
Mhm.
than we can. So yeah,
Yeah, because
we do that.
they were asking about being scammed and fraud, and if
Yeah,
they receive the text or the emails, and they're like,
right.
"Hey, well, if you receive it, and they're, oh, you need to pay or whatever," and and
Oh,
and only because and I knew the answer because I've been audited myself, and I'd received
mhm.
the letter, so I told her, "No,
Yes,
no, 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 you receive a letter, an official letter
yes,
from the IRS, so
yeah,
that's when you pay attention to it." So I just wanted to
yes,
make it official, and everybody out
yes,
there, the IRS will only send you a letter. Do not pay
yes.
attention to any other form of communication. It will be by letter.
For sure. Okay, yeah. If you put it like that, yes, I would never trust a text or
Yeah,
anything like that. It will be a physical letter with the seal, with the IRS seal and everything like
yes. All right. Okay. So I think we're getting close to our time.
that. Okay.
And before we go, again, I wanted to thank you, Taylor, for this amazing program. A lot of information, everybody. So please be aware that it is being recorded. And once I end the stream, it will automatically show up on our YouTube channel. So at any point, you can just go forward and listen, skip any areas you don't want to listen to, or if you want to sort of skip ahead and go directly to the areas you want to pay more attention. Closely to, I should say, and then you can just go around the whole video. But I do want to also really point out before we leave that next Saturday on the 21st, KYCC will have its FIDA set up here on Saturday, February 21st from 10 a.m. to 2 p.m. They will be here at the Central Library. So I will put the link on the chat comment box. So for those of you who are interested in joining us that day, please go ahead and register if there are any spots still available for to do your taxes with VITA. Again, this is a free service. So please have all the documents that are necessary that Taylor mentioned in her presentation. And please take advantage of all the credits that she mentioned, both federal and state, which are amazing and that I was not even aware of, that there's a lot of money out there. so, so I could not believe the 11K amount that she threw out there. So yes, so please, again, that's next Saturday. That's going to be here at Central. No, wait, 14. Yeah, next Saturday. Um, I'm sorry, I'm a little sleep deprived at some point, and it was in a week and a half, give or take, after Valentine's. So please be aware of that, and please make your appointment. And if you can't, and if all the spots are taken, you can also do a walk-in. And again, just if you can't make an appointment with us, do a walk-in or make an appointment with Free Tax Prep LA as well, with any of the other organizations that Taylor mentioned. So again, thank you so much for being here with us today. We are at the end of our program. We passed it a little. If you have any questions, please reach out to Taylor's organization, KYCC, to the library here at Business and Economics at LAPL. We also assist with any organizations who do VITA. So we will help you with that as well. And again, thank you so much and have a great afternoon. Thank you, Taylor. And bye, everyone.